One live. Dear audience, attendees, welcome again our one of the new digital event about technologies, of course, this time fintech and one of the fintech area now rising, as maybe you know that all around the world is digital banking is a case, and then after digital banking, free neo bankings and challenger bankings in the other name, challenger banks on the board as around you. You will be affecting more and more. You will know them more and more by the time. So now, as fintech CEO club, we are, and then also faster community. We are leader of technology all around the world, business people and technology people, and we like to analyze business and technology together. What's going on in this kind of specific areas now, as I said, Neobank on the board. So we have two valuable contributors to our events today, and I would like to introduce them to you in shortly, and then we will we want to make deeply on their insight to share with you. So, Mr. Pedro, uh, uh, we would like to more about you as an introduction. What is your position, and please share about you.
Very good. Thank you, Mustafa. It's a pleasure to be here and to join this initiative. I'm Pedro Pinto Coelho, and I'm currently the chairman of the FinTech and InsurTech Association in Portugal. And I had the benefit of leading a bank for over 5 years in the beginning of what is has been a very important journey for fintech. So when I joined the bank where I was a former chairman, basically I tried to create a number of partnerships with fintechs, and I'll be very happy to share my experience with the audience and tell you how we can benefit from the growing ecosystem that is evolving every day, obviously across different sectors, verticals, and across different geographies.
Welcome, Mr. Pedro. So let's continue with Omar Bey. Mr. Omar, please.
Thank you, everyone. My name is Omar Mansoor. I am the Global Engagement Lead for all enterprise projects for Codebase Technologies. Codebase Technologies is a technology organization spread over 8 countries. Our speciality has been in building digital banks and working together towards making neobanks the household norm. We support traditional banks, and we have been supporting traditional banks from a technology perspective for over 2 decades. And we have now shifted our focus over the past 4 years towards bringing together cutting edge technologies to the Islamic and conventional banking spaces. We currently have set up multiple digital banks, and we have worked together with traditional banks willing to go digital and challenger banks from scratch willing to uh, enter into the market and provide the customers with a convenience of digital finance, while at the same time addressing the digital financial literacy and inclusion agenda.
Welcome, Mr. Omar. So thank you for this introduction to our audience about you. And then let's continue deeply a little, Mr. Pedro. As far as I know, you were and still you are in neobank market, and you have experienced at neobanks that establishment phase and growing phase. And what is the effect? I would like to ask you, what is the effect of one neobank in the market? I mean, in fintech market, in technology market, in software market, in innovation market. Of course, fintech partnership and open banking and regulations or startup market is affecting by establishing by one neobanking, because neobanking is a kind of something big. Yani must be big. So what is the effect of neobanking to the ecosystem of around it? What do you think?
Yes, I would say neobanks are part of a trend of financial institutions that are willing to create disruption, meaning that are really intending to grow the business through digital platforms and taking advantage of the most advanced technologies that are currently available, and also some business opportunities that otherwise, without the digital component, would not be possible. So, in other words, you have on one side the incumbent banks that have legacy issues, both from technology systems and from people, the way they do business through branches, without using effectively the digitalization of processes. And then you have neobanks that really are considering doing the most through a digital way. But obviously, one cannot invent everything. So neobanks have to rely on technology partners like the one represented by Omar that allow them to quickly be able to implement and operate a banking institution and go out there in the market and bring clients without the need of having a physical infrastructure, namely branches. So I would say it's quite relevant that you obviously choose the most flexible and updated technology, and that you are able to really maneuver and be able to be alert on everything that is coming out, because technology is evolving very fast, as opposed to the incumbent banks, which usually try to develop internally a number of tools. And obviously nowadays, with the acceleration of technology, one requires to have very strong technology partners outside the institution to guarantee that they are always updated on the different areas. And I'll give you a very simple example. This all started with account opening. Account opening seems to be an easy process, but it's challenging because of regulatory issues. So, and only very recently, you have been allowed, or banks have been allowed to open an account remotely with a client. And even some regulators are still quite strict in how to be able to open an account remotely. So I would say this is something, it seems simple, but effectively we have to prove regulators that nowadays technology is even better than the human interaction when you open an account physically in a branch, because we validate the identity of the client, we validate the documents, and we have procedures that will guarantee that we have done all the KYC required, and this can be done in a very seamless way. Now regulators are embracing this way of doing banking, which is very, very relevant. The second example is, for instance, providing credit. Before you would have to go to a branch, ask for credit, take some time for them to analyze your risk profile, and then they would come back with a proposal, and that could take weeks, if not months. Nowadays, we have technologies that allow you to have an instant credit approval, where you onboard the client. The client says what you want, what you require, what he requires. Then you run an algorithm based on the type of credit you want and you identify whether the client profile is a good one. You have access to his data through APIs to the bank, usually Bank Suite, to see the cash flow on his current account or accounts. And then you make an immediate decision and credit approval. You get him to sign, you present the contract, the terms and conditions, the contract. He can sign the contract digitally, and then you disperse. And this could be done in less than 24 hours. So this is just a way to present how quickly digitalization is being able to accelerate the pace of providing services the same way the client is used to get Uber or to use Amazon for his other products and services. Now banking is trying to catch up and obviously trying to do this. I'm not saying digitalization is effectively it solves everything, because ultimately, depending on the type of product and service, obviously banks still need to have relationship managers and interaction with the client, whether it's to a chat bot, whether it's through a call center, a dedicated relationship manager. It really depends on the product. But what we see is a big revolution and digitalization across the whole value chain, whether it's the front end through a better customer experience and customer interaction, as well as the middle and the back office. Because I would say a number of banks have advanced very quickly on the front, but they forget the middle and the back office, and then the client gets frustrated. So it's very relevant when you do actually move forward, you guarantee that you do really embrace digitalization across the whole value chain. And before I pass the word to Omar, let me give you a very funny example that I saw about a bank trying to become a digital bank. He created a front, and then you would ask clients if they want, they could ask for checks. You know, nowadays checks is something from the old days. And it's funny that when you become a digital bank, you have to also embrace the new ways of payments. So clients should discontinue the use of checks, because I know that people are still used to the old way of doing banking, but we have to also educate the client in a way that now it's digital. Now you can do payments without the need of checks. Otherwise, there's no point on digitalizing when you still have to use checks back and forth. And I know that sometimes it's difficult to overcome these obstacles, but with the legacy issues and the way people used to do banking, it's an educational process. But I believe, you know, neobanks are really critical to allow the whole financial services system to evolve faster. That's it for the time being, Mustafa. I don't know if you're gonna have Omar now jumping in.
Most welcome. Thank you, of course. And then we will continue maybe some of the subject deeply about, for example, as neobanks mostly depend on mobile application as mobile app banks, and then we can a little focus on new generations like mobile apps. Mobile apps usage is coming. Youth people, unbanked people, maybe easily open their account from mobile apps. They would like to do to be on this easy issues that we will continue, and then we will continue on, of course, how we can at the back office side, how push notification or some sort of data insight of the customers can be very useful for even customers, even both side, even in the ecosystem. Let's continue, and then let's continue with Omar. Mr. Omar, as you are a technology provider of digital banks and neobanks, what is your perspective and what do you experience about when you are developing digital banks technologies, and is there any regulation points of problems, or you are focusing on which kind of parameters that stopping you, or you like to be easy that your customers wants from you that you are happy also to providing these technologies, which
Perfect. First, thank you, Pedro. You have hit the nail in your in the last question. You have hit the nail on everything pertaining to digital banks. But the question basically comes from, why did digital banks or neobanks come into being? Neobanks very simply came into being because they were unable to provide their customers with the service that they wanted. Customer stickiness, deposit mobilization, and account opening were the three critical key things that customers were looking for. So as code-based technologies, when we work together with an organization, institution, or a consortium to build a digital bank or to address the required needs for a digital institution, we do one simple thing first. We basically analyze the why, what, and who. Why do you want a digital bank? what do you want in that digital bank, and who do you want that digital bank to be for? And going back to your statement about financial literacy and financial inclusion, most of the neobanks that basically are coming out, they're all, each one has a unique proposition, whereas some are basically focusing on banking the unbanked, whereas some are basically focusing on providing SME, digital SME servicings, like SME loans or corporate banking, etc., and so forth. Whereas you have some that basically are there just for the general public. Some are basically addressing the youth. So it basically goes back to understand that how many people in the world right now have mobile devices. That's the first thing. Every person who does not have a bank account, there's a very high probability that they have a mobile device as well. And I'm speaking from countries like Pakistan or India or Bangladesh, high population countries where they don't have a physical bank account, some of these people, but they do have a mobile device that can enable them to open a bank account. Now, if you take it from a perspective of volume, that means there's a lot of deposit mobilization that institutions that opt to go the digital route can basically go to, if they choose to alter their strategy or their account opening process for um, a population or a region that requires banking in general. Previously, traditional banks, because of what Pedro had mentioned, due to legacy systems and the inability of legacy systems to be flexible enough to cater towards demographics that are not able to open a bank account, was an issue. So what they were doing was they were missing out on potential opportunities. Now, let's say that demographic or somebody from that demographic started getting an income stream through some means that was sizable enough for them to be able to open a bank account. That is a customer lost for that bank. Whereas had he been educated enough on financial literacy, he would have understood that he can use his mobile device to basically open a bank. Now, as Codebase, what we have done is we work together with a client and we basically understand what their overall strategy is. So before we start building, proposing, or working together to build a proposition, we basically do a very standard analysis, working together very closely with the business teams and the technology teams. So we have a full spectrum idea of what is currently available, what needs to be built from scratch, and how can we basically make sure that IT teams and business teams of financial institutions are online, or we are all on the same page. Because at the end of the day, business is what drives the initiative of the bank. It's their job to bring in business. It's IT's job to service the business that the bank basically brings in the least costly manner or the most cost-effective manner possible. So we look at their existing systems, or we propose to them that, hey, you are missing XYZ components in your system. Your business wants to basically do something around XYZ, and this is how you can basically make this possible using our platform, because we can fill in the gaps in your legacy systems. So we basically come in from also a remedial approach, where we provide them with the technologies that we have to either make their existing infrastructure robust enough to be able to cater to the requirements that they need, or we basically provide them with a full stack service, in the sense that if they want to redo everything from scratch, we have that capability, and we allow them using modern APIs, using the industry's best practices for the latest technologies, methodologies that involve a very heavy use of cloud computing as well. Because at the end of the day, if you look at it, the more efficient your technology is, the more your organization from a business perspective can achieve. At the same time, whatever money you save in your operations is money earned for the bank at the end of the day. One of the best examples is that we did a digital bank in Bahrain called Jazeel, and we worked very closely with the business teams, and we worked very closely with a lot of organizations that were involved in that, including their existing third-party providers. And instead of telling the bank to completely start from scratch, we said that this is what you have right now. It's workable to basically do this. Why don't we give you a digital enablement layer, and we provide you with the front-end service that will enable you to get how would you say, the necessary competencies that you are trying to aspire towards. And alhamdulillah, in because of the cooperation from the bank, their team was fantastic. They were willing to work with us day and night to ensure that in less than 3.5 months, we delivered a complete neo banking proposition that was Bahrain's first. So that was the impact just one bank, one neo bank basically had on an entire country, where slowly down the line they saved so much operationally that they were able to reduce the physical branch costs and the physical footfall that they had during their day-to-day operations.
Thank you, Omar Bey. After second circle, we will continue on. I would like to ask you which specific name in Bahrain or another neobank you are started. After started, which kind of operation needed by your customer side? I mean, as neobank, what the optimization or data optimization or UX optimization they
Of
are
course.
asking for. I want to ask also. I want to ask this Pedro, you have experienced neobank in Portugal. Then during these experiences, after launching neobank, what kind of suffering points or optimization points or of the demands of customer waiting from you need something and you are optimizing your services or increasing your services and then also including, I would like at the question that one of our audience asking Fatin Zajeri that from Oman, what is the product range in neobanks? Exactly, for example, saving account, financing, investment, according to the traditional banks.
I don't know if I can jump in, but I would say, Mustafa, that one of the real challenges of neobanks, like any startup business, and Omar just referred on his conversation, is client acquisition. Okay, so you have to acquire clients, and then once you acquire those clients, you need to make money with those clients. And sometimes banking is not obvious. So once you open an account, does not mean that you are really making money with that client, because banking is different from other businesses. So you open an account with a bank, you become a banking client, but you become a cost to the bank because you're just opening an account. And that by itself is a cost to the bank, because we have done the KYC on you. We now have you on our core banking system. So we have to run the core banking system every day. You may make some payments, and typically neobanks try to make a proposal of very low, if not non-existent fees. So it is important that at the outset, in the beginning, you really define exactly what will be the client acquisition strategy going forward. I think long are the days where it was that VCs and other investors were willing to put money in these neobanks, and they would grow their number of clients without necessarily earning money. But now you see more pressure from investors to say, show me, now that you have a client base, what are you doing with these clients? And we have seen the shift. And coming to your question about type of products, that it's not enough to have transactional banking alone for neobanks. So as you know, the likes of N26, Revolut, and other names that are well known in the market, they started that way, and they thought that just by increasing the number of clients, the bank would be worth more. But that is not the case. So they needed to make an effort to cross-sell with other products and to guarantee that the client would be willing to use them for the purposes of credit, for FX, for wealth management. It depends really on the client you are using. And obviously, in our case, because we understood from the beginning that it was difficult to bring clients. We needed to have different sets of clients for each product. Let me give you an example. Deposits, term deposits. If you are a 20-plus-year-old young person, you probably don't have a lot of money to bring deposits. You need cash, you need financing. So we would have to address clients that were 40-plus-years old that had some savings, and they would bring deposits to us, and we would create term deposit products. And then we decided, okay, but our market is quite small. What do we do? Maybe we should increase our offer to other countries in Europe. And then a couple of fintechs happened to grow and be created, where they created a marketplace of deposits across Europe. So we could eventually bring German clients, Austrian clients, Dutch clients to deposit with our bank under the guarantee of this, the fund deposit guarantee that would guarantee your deposit up to 100,000 euro. So even if they didn't know the bank that well, they knew that they were guaranteed, and they could do an arbitrage in terms of interest rates. They would get zero in Germany in their German bank, but in Portugal they could get probably 1% instead. So that allowed us to grow the client base from a deposit perspective. And on the lending side, another business, we could grow our own products on the lending side, but again, acquiring clients takes time, and to grow the balance sheet takes time. So we actually created another set of business partnerships with another type of different fintechs, which are in the lending market, in what we call the alternative lending market, where you are able to give mandates and monitor the performance of these platforms and ask them, you should originate for me X amount of SME loans, small and medium-sized company loans, or invoice financing receivables, so that we can have that on our balance sheet, or consumer loans. So this allows us to grow faster than obviously doing everything internally. So I would say you have to be smart in a way that you allow yourself to grow and to become profitable, obviously, as soon as possible. And we see that investors now are becoming more and more anxious, and they don't want to wait 5 years, 10 years for you to become profitable. Obviously, this does not work in every single market. Each market is different. You have this type of partnerships in the US, in Europe. They are large markets. Maybe in a more fragmented market like the Middle East, it's more difficult. But I would say then the solution is to also team up with other non-banks which have their client base, and you can have access. So that's why, for instance, we see in Southeast Asia partnerships being made between neobanks and taxi applications like Grab, for instance. So you have these tendencies, or Amazon, or other type of platforms that are bringing some clients, they are bringing the history, and then they are able to use banking services through a regulated entity, obviously, because these non-banks, they cannot provide that. And just complementing on what Omar said about the ability to tap as a mobile app, I would say there is a huge opportunity, particularly for the emerging markets, on really banking the unbanked, exactly for the reasons Omar mentioned about being mobile ready and having an app where you can do, the basic services of banking. Before, we had the huge cost of having to deploy physical premises across the country. Now you have countries like the Philippines that are thousands of islands, or countries like Pakistan and India, which are huge, and banks, obviously neobanks, now have the ability to tap into these clients, and the client basically can do everything from its app, but obviously one needs to reach that client. And that's why sometimes we have seen certain countries where these type of institutions team up, for instance, with telecom companies. We have seen before the neobank wave came, we have seen a very innovative idea which started in Kenya, the M-Pesa, where basically you would have your money sitting in a wallet, and the wallet was basically prepaid airtime on your mobile phone, where you could transfer money across the country. So I think now we are trying to institutionalize this. Before, this was a telecom company who did this and was not even regulated. But now, as we can see, regulators are much more aware of this type of technologies, and we are seeing the merge between what clients want and need versus what banks can provide in a regulated fashion with the use of technology. And this can accelerate much more the ability to tap into the unbanked people and provide them not only with transactional services, but also with microcredit and other initiatives that we have seen across different markets. So it's a very interesting period, but one also always has to be conscious that client acquisition is key. And that's why it's not just let's ask for a great technology platform and let's go out into business. You have to spend millions, if not billions, in client acquisition, or you have to have a strong partner that will bring his client base for you to leverage from.
Thank you, Mr. Pedro, for while you are saying client acquisition, just I have an idea as tech fins. Yani, big tech companies like Google, Amazon, Alibaba already has got many clients for them, and they are somehow in steps entering fintech area, some payment issue by starting with payment. Maybe they like to enter already, they have a client base, some banking area maybe is easy as client acquisition will be as much easy like this, they will say to us. So we will analyze again this. It was good that because when we are talking about technology infrastructure, we are always forgetting customer side, how we manage customers, how we acquire customer, and customer engagement and customer journey issues is very important as UX, especially UX in mobile phones is very important. If you are missing some small point in mobile phone, forget this application for new generation. So let's continue with Omar. Omar, as step by step the world is going to the digital, means that the world is going to the cyber security awareness or vulnerability. So in your application or infrastructure, also please, if you have some cyber security constellation of your application for your neobanks application or digital bank application, please do give, if you can give the name of some neobank you are currently developing and launch it already, from which country, as you mentioned Bahrain, you have some project. So if you mention the name of the cyber security side and the other optimization side of the technology, we will be happy.
Of course. So there's two things actually from two projects that I would basically like to talk about that we are working on, and we have launched one of them, and the other one, inshallah, is launching in a few months. One of these is called MoneyMint, which is a ethical bank, which is Europe and UK's first ethical digital bank. And the other one, basically, we launched about 2 weeks ago, called Roshan, in partnership with Dubai Islamic Bank. So just a little context about Dubai Islamic Bank Roshan, because that is the best one to basically address this question, is what it has done is it has provided a vehicle for Pakistanis and non-resident of Pakistan that are living abroad outside of Pakistan, which is approximately 7.6 million Pakistanis living in various parts of the world, the opportunity and ability to onboard very seamlessly because of a very simple, straightforward UI UX, workflow. And at the same time, it allows them to basically open a Pakistani bank account without ever having to visit Pakistan. And what they can do is they can remit money back into Pakistan, into the DIB account, and then they can basically conduct various banking activities while staying outside of Pakistan. So one of the things that cybersecurity, to address the cybersecurity concern as well, just like every uh, organization that chooses to go from manual to digital, there will always be small loopholes and gaps. But Alhamdulillah, the good thing about banking technology and enterprise grade technology is they all use the industry best practices that the regulators themselves and what cybersecurity consultants basically recommend them to do. For example, you have organizations like Symantec, and then you have Dark Matter, etc., and so forth. What they basically do is they come on as an advisory role when the bank is being set up or when there is a digital initiative that is going live, and they basically provide them with a gap analysis or areas of consideration to ensure that once the bank does go live through a simulated environment, what are the possibilities of things that could go wrong. So those holes or leakages that potentially could arise from a very complex deployment end up being patched up during a simulated environment. And at the same time, the good thing about being completely digital is that you can monitor every um, transaction that goes in and out. You have complex and very robust audit logs. You have monitoring tools that basically monitor the API health, integrities, etc., and so forth. You have consistent integration testing as well. You have multiple firewalls as well, because just like how you have a traditional bank, if you want to get to the vault of the bank, you have to go through multiple walls and routes. You have to go through various areas in the bank to be able to access that vault. So think of that physical representation of a bank now on a digital perspective. Whereas if you want to access your finances or you want to access your account, you have to go through those various checkpoints, securities, etc., and so forth to address the money part of the money component of the digital institution as well. So one of the projects that we had done when we were doing with Dubai Islamic Bank around this Russian project was we made it go live in 22 days because we already had a ready framework that had been that had gotten the regulatory approval prior as well. So we didn't have to re-engineer a lot of things as well. We took it out of the box, we plugged it in, but the main concern was around the UI UX workflow, because a lot of things uh, we had to address as stated by State Bank of Pakistan, which was the regulator as well, because you are allowing a bank locally in Pakistan that has to do cross-border applications as well. So that was a concern that they had, because they were like, how would a person sitting in, for example, Hungary be able to open a bank account in Pakistan and be able to do XYZ things? How would they be able to remit money? And what is the probability of that remittance being intercepted in between? What about uh, the time zone differences when there is a remittance basically happening? Because usually every banking system has a day end process where they do the day end reconciliation of all the financial transactions that have basically happened. And in order to be able to cater to 7.6 million Pakistanis across the world, you need to have a system that has 24/7 uptime, because their time zones are different. Because if somebody wants to remit money in Portugal at 3 p.m., it could be 12 a.m. in Pakistan, and probably that's when the scheduler starts running for the core banking system. So you had to basically take a lot of these things into account as well, and make sure that you can cater and facilitate to this. And when the system is the most vulnerable, when there is a scheduler running or when it's basically having downtime. So Alhamdulillah, from that perspective, whatever deployment we have done, our systems have been able to keep 24/7 uptime. So we don't have to worry too much about the cybersecurity part. But as applications are evolving, as Pedro had basically mentioned earlier, the technology is evolving at a very rapid pace. What you have today is outdated by tomorrow. Literally in 24 hours, it is old news. So just like that, you have various threats, various methodologies of having DDoS attacks or hacks, etc., and so forth. Um, Taking on new ways to penetrate the fiduciary institution. And in order to basically do that, we have a methodology internally as well, where we continuously keep improving the technology, and we keep working very closely with cybersecurity and security experts to ensure that whatever deployment we do, or whatever technology we have, or whatever component of our technology that has been upgraded maintains the industry best level of security and integrity.
Uh, Thank you, Omar, and we will circle again on these topics. I want to ask Pedro. I want to ask you about several questions together. For example, as Omar mentioned, that ethical banks, ethical neobanks. Now we can somehow generate or summarize banks, commercial banks, and social ethical banks that needs and social responsibility part of banks that even supported by religionic issues as serving as religionic side of support to the society. So, as this perspective, do you think neobanks will bring some extra fast benefit to the social banks that reach to the unbanks? Because of progress of traditional banks, even traditional banks, as far as I know, starting from many years ago for business needs, that farmers to carry needs their production to the cities to sell, and then banks giving loans, and then starting some tijarat and trade kind of issues. But I mean, after that, some social responsibility or equity banks for the society needs digitalization can be good for them to reach to the society for social responsibility. One of these, I want to also ask this question to Omar as technology perspective. He is keen on this. And then secondly, after your experiences in Portugal, that after you gained customers, how you score them, how you offer microcredit them, and in this operation, during this operation, that needs more technology issue or more business kind of financing issue, you were suffering points during your experience.
Very good, Mustafa. I would start with the first question about social responsibility. I would say that obviously now every bank, whether it's a neobank or not, are eager to have a component of social responsibility and also some products that are directed at this. So I would say that obviously digitalization helps you fulfill that goal in a way. Let me give you an example. I would say that with digitalization, assuming that you are able to monitor the client's payments and financing, you are able to guarantee that the money that you lend is lent for a good purpose, for his business and not for his recreation, for instance. And then if you control his account in a, I would say in a ethical way, you can see whether the use of that cash is really for the benefit of the society, for the benefit of growing employment and all that. So what I'm trying to say is that one can use the digitalization and the information that is out there available to monitor the ability of the bank to deploy cash for the benefit of the client, but also for the benefit of creating employment, society, for the benefit of the society overall, depending on the goals. So one can have specific goals. Let's say I have a particular product, which is I will have financing of green energy in my market. So I can create that product and I can follow the whole the whole process to guarantee that that money is deployed for that particular purpose. Or I can create a product where I finance the business and that money is used to expand the business and to create jobs. Then I think monitoring the account, I can really provide evidence to my investors or to my stakeholders that I am doing good for the society. Before, it was very difficult to do this. You would need auditors and people checking whether you did it or you didn't. Now, with digitalization, you create a digital record, which is very easy to prove that the bank is really doing business for the social good. There is also an emergence of ethical banks. I think it started already in the more developed markets and now is transitioning to emerging markets. On the developed markets, I would say the ethical banks are more I would say pivoted towards the use of fees. For instance, I give you a credit card, and the credit card, the commissions that I charge you, part of it, it's going to go for a good cause, something that we share as values on the client base. Maybe it's to help a foundation to fight poverty, or maybe it's to help a foundation to fight the climate issue around the world. So there are different causes, and people identify with this, and particularly the young population, they want banking to have a good connotation, not necessarily a bad. So I want to bank with banks that are providing good. On what concerns more the emerging markets, banks can actually go directly into the society, and as you rightly mentioned, for the benefit of people that before didn't have these services, I can target specific client bases. Let's say I can go and target women entrepreneurs because maybe they are left out and they are not able to get credit with a program which I provide, and I provide lines of credit for that particular business for entrepreneurial females. So that's just an example. So I can really, with the digital banking instrument, provide. And I see there are more and more initiatives, not only banks specific for this type of vision, but also existing banks that are trying to create products associated with the ethical part. Regarding the second question about how credit grows and as a neobank, so it's very important to say that you have different challenges depending on the type of credit product. So if you are a bank starting from scratch, you need to create and you need to spend money to grow your client base and test your credit model. And it's obvious that initially you may have some increasing losses due to non-performing loans, as opposed to a more mature and bigger sample of clients and customers. So the moment you start to grow your portfolio, then you have more data points and you can be much more effective regarding the ability to provide credit with lower non-performing, with lower losses effectively. But the good news is that the new instruments, particularly associated with artificial intelligence and with the digital footprint that clients now have, allows you to really accelerate that process. So what used to be a huge data set of information, now you are able to reduce this further. And I would say even more, now with open banking, you are able to tap into the client's track record in terms of payments, in terms of cash flow on his account in other banks. So you have access to that information wherever open banking is available. I know some markets don't have open banking, but they do ask for permission for the client to access his own internet banking, and you are able to go through his internet banking, extract that information, and you have a pretty good idea if the client, what type of profile he has, and then you compare with other clients. That has accelerated, obviously, the process. Also, countries, depending on the country, have been able to amass a lot of information under the central bank, because all the banks are contributing to a database of clients that eventually have had the financial difficulties, and one can screen these clients when accessing these databases, and not necessarily exclusively limited to the financial institutions, but also to utilities. So if you default on paying your electricity bill or your telecom bill, we still can see that you might have some financial products. So things are evolving quite fast. And I would say artificial intelligence and machine learning has allowed the process to be much quicker in the credit space. And now we see even institutions providing credit, even microcredit, to people that are just using mobile phones, and based on the profile of their communication, for instance, I am able to understand whether you are credit worth or not. So that is a big evolution, and that's what we call the digital footprint that clients have more and more, and that will allow banks to grow faster. Another aspect which is quite relevant is the payments scheme. That's why payment apps and payment platforms also have an advantage, whether it's from small and medium-sized companies or from private clients, to understand the nature of the payment trends of the client and to give them credit if they want. But obviously, this type of technologies have created so many opportunities that now you are starting to see different verticals, even within the credit space. One example is the boom in a number of markets of the buy now, pay later solution. So now a number of markets are joining forces. What has been a very popular product for many years in Latin America, in particular in Brazil. So now you can go to a store and you have the option to buy anything in installments immediately, and they will check there instantly, and they can give you even interest-free, payment. They can provide you an alternative with interest-free payment at the moment of a purchase. So this is something. It's a sector, for instance, that it's growing quite fast, and because of the amount of data they are able to get, they are speeding up this type of processes. That's what I wanted to share. Thank you, Mustafa.
Thank you, Pedro. Really, you really could summarize that these credit products and the AI coming on, machine learning coming on. This even there was a maybe a very critical question that touched this area is customer data belongs to customer or customer data belongs to the institutions. In some countries says according to the regulation, companies, banks shouldn't share this, but some open bank areas share this to the all institution upon the customer wants to share, and then more good specific and precision data can be more useful about customer to offer some new microcredits, loans, or something extra like this. So thank you again, and then let's continue on Omar, and then we will also somehow at the closing stage of the session, For me, really, shukran. Thank you, both of you, that you are very keen on your area, and your summarize and brief info and executive level and technology engineering level was really very nice. For I feel for this, I let me say this. So one question from Bahrain, and then I want to continue with Omar. Bahrain, one of our CEO club, FinTech CEO club member, Ahmed Salah Al-Barishi, also asking what are the disadvantages of a neobank and what is the future of neobanks. From Ahmed Al-Barishi, salam to Bahrain, and then Omar Bey, we want to continue with you.
Of course. So, just like every institution, if you think about it compared to prior, before, I'm going to use an analogy from the automotive industry. People used to have horses. They used to love driving horses, riding horses, and they would basically have a bond with the horse, and they would love it. And then when the first car basically came into being, people were like, "Oh, I have to maintain it. It does. If something breaks, it does not heal by itself anymore. I have to constantly keep putting something in it in terms of maintaining its parts, etc., and so forth. Whereas a horse, all you had to do was brush it, feed it, and just change its shoes. And everybody was like, the horse is the best. And then as the cars basically started to evolve and become more efficient, etc., and so forth, they became the primary mode of transportation. So just like that, neobanks right now they have certain disadvantages, but at the rate as Pedro had basically mentioned that the technology is evolving and how we are basically integrating third-party systems and methodologies such as AI, etc., and so forth into they're becoming smarter, better to the point where it doesn't seem like that digital banking would be just a phenomena anymore, that will just be like a phase that will come and go. It's now becoming a household norm. One of the main disadvantages that used to be for digital banks prior was that I have opened a digital bank from sitting from home, and I'm using it, but I have a concern. What is my concern? I need to get in touch with someone. And what happens is it's hard to get in touch with customer service for that bank in order to basically get some questions that the chatbot or the FAQs might not be able to answer for you. That is one thing. Digital banks do accelerate a lot of the conveniences that customers or the mobile generation, as we like to call them, have, but they are losing the relationship touch, the human touch. And as now new banks and new banking technologies are integrating newer and more fascinating chatbot features into their existing applications, it's basically slowly closing the gap in between customer service, customer relationship, and at the same time having an automated system that basically does everything. The other disadvantage that I personally feel would be it's more humorous actually. One disadvantage that I personally see neobanks having is the battery. If your phone dies, you can't do much with it anymore. So battery would be one thing. But apart from that, a lot of the issues that neobanks are having, they have been addressed very fairly, very quickly through working together with innovative new fintechs, new technology companies, upgrades to existing systems, etc., and so forth. To address the second question, what is the future of neobanks? I personally see neobanks replacing traditional banks eventually, because everything started with retail banking, where you, as Pedro had mentioned earlier during the session, that it was just a customer account opening. The customer would basically open a bank account, and the only thing he could do is just see his balance. That's it on his phone. And then they introduced things like CASA accounts. And then they basically started introducing term deposit accounts, and they started introducing specialized savings accounts and price linked accounts, etc., and so forth. And one of the things that we are basically working with a few banks in Bahrain, I'm not allowed to mention them yet, but we are doing front-end mobile lending. So we have our own engine and digital lending platform that can enable any front end, or we create a front end for any bank that or any digital bank that wants to do instant microfinance, instant micro lending, uh, instant auto financing under 24 hours or within minutes, auto financing mortgages, and personal finance as well. So one of the phenomena that we are basically trying to crack, and we have done it now, we're in the process of implementing that, is, let's say you are a customer and you want to basically go to a car showroom. You go to that car showroom, you open your banking application, and you can see that exact same car right there in the showroom. And you want to go home with it. You don't want to go through the process of putting down a down payment and applying for a loan right there, waiting for like 3 days or 2 days to basically get your approval. Once you get the approval, wait another day for disbursement of funds, etc., and so forth. And the whole buying of your car process becomes 1 week long. So what we had basically done is we sort of closed that gap, and we said, you know what, why don't you take a page out of something like Zomato, or why don't you take a page out of Grab, where you click on something and you want it instantly right there and then? Why can't you do the exact same thing with things like cars, mortgages, etc., and so forth? That way, you are building your customer loyalty, you're improving the customer experience. You have basically closed and streamlined the manual gaps for credit scoring and loan origination management and disbursement via one click. The customer does not need to submit physical documents anymore, because through his banking history, all the documents and all the information and all the spending capabilities, his KYC, everything has already been collected. So why do you need to do that again? All you have to do is basically reference it to the database of that customer. You have everything. You have your APIs that are connected to the credit bureau. You can run a complete analysis on the customer and more, just by the customer only pressing a button. So to the customer, it shows that I'm pressing a button, I'm just selecting the car I want, 4 or 5 clicks, barely any input, if any, scanning my ID card just to show consent that yes, I do consent to this lending transaction. And within 30 minutes to 40 minutes, while he's having his coffee and he's chatting with the car salesman, his car is ready. I personally believe that neobanks have the potential to not only transform the entire paradigm of not only financial inclusion literacy, but at the same time educate the unbanked, banked, and existing patrons of financial institutions on becoming more literate towards the application of their banks. Uh, it's basically something that I feel that is going to evolve extremely fast in maybe 2 years maximum, to the point where I feel that I will never have to step foot in a branch anymore, ever.
Thank you, Omar. And really, thanks. Now, I want to thanks all audience who share time with us. Now, after 1 hour, we are last stage of closing stage, as starting from Pedro. Pedro, as lastly, what do you want to share in maybe future of neobanks? And again, thank you that your contribution. Also, Omar, thank you for your real contributions about your experiences to this discussion panel. Let's spend.
Mustafa, thank you very much. I would just say that I think it was a very rich discussion, and you as a moderator, I think you pinpointed a number of very important topics, and this just shows that 1 hour is not enough. We could be here for hours. So I would suggest, depending on the audience interest, we'll be more than happy, and I'm sure Omar would be happy as well, for us to go into more detail in particular areas within the neobanks, because I mean there's a lot more to say, different types of business models which then associate different challenges on the technology side, and I'll be very happy to contribute further to this discussion, depending on the interest of the audience and what type of areas they really see more potential and want to get a deeper understanding. But thank you very much, Mustafa, for this initiative. I think it was very, very useful. And I hope the audience enjoyed our discussion as much as I did.
Me, thank you also to Pedro, you that you are initiative of this discussion panel for neobanks in private. Thank you also to you. Omar, as closing sentences.
First of all, thank you so much to the audience for giving us the time and opportunity. Mustafa, you have been fantastic at facilitating this discussion. And I do agree with Pedro. If
Welcome.
we did not have a moderator to basically stop us, we would have gone for hours and hours. Um, our LinkedIn's are available as well. So should anybody need to reach out to us and basically have a discussion just over technicalities of overall, or if they just want to know more about the neobanks, digital banking, etc., the intricacies involved, we would be more than happy to facilitate. Neobanking basically is here to stay. It's one of the phenomena that we cannot ignore. And just like how blockchain has enabled Bitcoin to completely change the paradigm of fiduciary activities, the same thing neobank has basically done to the financial industry, where it's not only just limited to banking, as Pedro had mentioned, telcos, insurance companies, etc., and so forth. Technology has given the ability to almost any institution that is willing to go or have financial aspirations to be in the banking or finance industry, the golden key, as I would like to say. Many thanks to the audience. Many thanks to Mustafa, Faster Community, and Pedro. Pleasure to have been a part of this, and I look forward and would be more than happy to participate in the part 2 of this discussion, as I believe that this panel requires a sequel.
Exactly. Very good.
Most welcome. Yes. Very,
Thank you
very
very
good.
much.
Thank you very much to all. And
Today.
together, all we want to say, have a nice days and next meeting. Let's meet next meeting. We will do as fintech another subject. Of course, new one again we will do as digital panel. We are focusing on fast and dynamic panel because of digital needs of very fast people audience like to see this in a little bit short 1 hour, and then we will continue another 1 hour in several months later. I promise we will do inshallah. So see you everyone
Great.
again.
Perfect. Thank you
Most
so
Thank you.
much,
Good
everyone.
day.
Have a great
Bye-bye.
day. Bye bye.
welcome.
Welcome. Salam.